We're going to talk about home prices and really break down what's happening with home prices. If you turn on the news or you read an article, there's so many opinions, so many things being said about home prices, what's going to, happen next year, what's happening right now. And the one thing I would say is don't ever trust the headlines without context. And I want to give you some context this morning as we go through the deep dive and talk about this. So Clarissa in Sacramento, great to have you. Jill in North Dallas, Texas. Fernando in Richmond, Virginia. So many folks watching right now. Holly, good to see you in LA. So let's get started on this. I want to give a little bit of context before we hop in. So many things being said right now about home prices. I want to give you that, the annual look at home prices, the month over month look at home prices. Typically when people talk about home price appreciation, they speak to it in an annual way. But when we get in a market like this, we start talking about it on a monthly basis. And so let's be educated on both of those topics. I want to give you some good graphics that you can use. I would highly recommend that you print these out, because as people hear things that are printed or on the news about home prices, this will help you be the educator and help folks understand what's going on. So I'll share my screen. Like I always do, if you're a KCM member, you can download these slides and grab those as you use them. If you're not a KCM member, start a free trial. But we're going to talk about home prices, really give you the context, what the experts are saying, and the numbers behind everything right now. So we start off with this quote right here from FHFA. The rate of U.S. home price growth has substantially decelerated. This deceleration is widespread, with about 1/3 of all states and metropolitan statistical areas registering annual growth below 10%. So they're saying states, and then metropolitan statistical areas. I always like to think of that as like a radio station coverage. It's not just a town, but maybe an area. 1/3 of those states registering annual growth below 10%. If you think about that, that means 2/3 are above 10%, even 10% in home price appreciation. Still very, very good. But no doubt we're in a time period, and we have been for several months, of deceleration, less appreciation, less momentum in the market, all due to the rise in interest rates. We've talked about that extensively on the deep dive. But if we look at September, the most recent numbers that are published, this comes out from FHFA and CoreLogic and Case-Shiller, 11%, 11.4, 10.6% appreciation in this country. Now, I know you think, gosh, September's in the rearview mirror, and it is, but this is the most recent data that was published at the end of November relative to home price appreciation on an annual basis. Less appreciation than what we've seen over the last couple of years. We talked about that being an anomaly in the real estate business, all the appreciation we've seen. And this is what it looks like graphically. I said I would print some of these out, or I would have them handy on an iPad or somewhere to show people. This is from CoreLogic going all the way back to January of last year, showing the rise up in residential home price appreciation and now this deceleration. And what I always like to remind people is the historical average for home price appreciation in this country is 3.8%. You see the orange bar on the left, and then sort of the line that I've driven there. We're heading back in line with that, and some calling for depreciation this year, some calling for marginal appreciation going into 2023. And I'll give you a little teaser. Next week on the deep dive, Kate is going to bring all the forecast for the 2023 market. This is one you don't want to miss. You want to share that and get that in the hands of other folks because you're going to want to grab those forecasts as people are talking about the market as you go into the holiday season. We'll all be sitting down with people having conversations, and you'll be able to say, okay, this is what is projected going into 2023. But if we look at the peak of the market in the spring of this year, and then sort of ever since April, deceleration, less appreciation annualized in the real estate business. But like I said before, it's in these types of markets where people want to start to talk about appreciation on a monthly basis. So let's start to look at month over month appreciation. This takes year over year. Let's look at month over month. And the question that I would sort of put out there is, have home values hit bottom in the market? So if we start out with January, this comes from Black Knight. This shows month over month appreciation or depreciation in the real estate market. So January, February, March, April, we're seeing through June appreciation in the market. and then this slight dip month over month in July, August, and September. Now, we'll see what comes out for October and then November, and watch that. But each month since July, we've seen a little bit less depreciation month over month in residential real estate. But that's the question we want to start to look at, is what's happening right now across the country. And I think that's going to be no doubt different depending on the area of the country you're in, the city that you're in. Mark Fleming says it best here when he says home price appreciation has slowed in all 50 markets that we track, but the deceleration is generally more dramatic in areas that experience the strongest peak with appreciation rates. So the areas that experience the strongest run up in prices are starting to see more pronounced decreases in pricing right now. But if we look at this from a month over month basis, and I'm going to kind of give you the Case-Shiller look here real quick, and the most recent numbers as of September, seeing negative depreciation across the markets. Now, slight depreciation in some of these markets. I've highlighted the red where it's over 2% in Dallas, Denver, Las Vegas, some West Coast markets, Phoenix, San Diego, San Francisco, and Seattle. But no doubt seeing that. Now, here's what becomes interesting. If we look at home price movement in the last 2 months in some of the hardest hit markets, and I'll show those to you here, in San Diego, San Francisco, Seattle, West Coast markets, where they were last month and then what's been most recently published this month. In each one of those markets, we see less depreciation. So take San Diego, for example, the month prior to negative 2.8%, this month 2.1%, although slight, but less. And you see that trend in each market, which is very interesting. Certainly not ready to call that, but something that we want to pay attention to as we watch home price movement across the country. I think that we're no doubt in a volatile market. We've seen a little bit of relief in interest rates, some good news maybe coming out about inflation until the jobs report came out Friday, a little bit better jobs report than I'm sure the Fed would have liked to have seen. But the average 30-year fixed right now is 6.49%, just below 6.5% according to Freddie Mac. But no doubt we're in a volatile market, and we'll see what happens going forward. I think it's too early to say, are we out of the woods yet by any stretch of the imagination? But Craig Lazar from the S&P says this: as the Federal Reserve continues to move interest rates higher, mortgage financing continues to be more expensive and housing becomes less affordable, giving the continued prospects for a challenging microeconomic environment. Home prices may well continue to weaken. So what he's talking about there is all of this is about inflation. We've been talking about that. And what the Fed is doing is raising the Fed funds rate to combat inflation. Now, going into December, they'll meet again. The likelihood is they're going to raise rates. There's nobody saying right now they're not going to raise rates. The question is by how much at this point. And I think the larger rate increase could have been signaled by the jobs report on Friday, but we'll have to wait and see what's happening there. But no doubt that is going to influence mortgage rates as we go through the month of December. It's going to cause panic. It's going to cause uncertainty. It's going to cause people to say, okay, what's going to happen as we go into the new year? And I want to give you a little perspective right now. We've always covered the forecast for home prices, and anybody that's calling for depreciation to appreciation across the ones that we track. But if you were to start to put into perspective, if prices were to drop by a certain amount, and I want to give you this because it's very, very interesting. If prices were to drop by 5% nationally, that'd take us back to February of this year. 10% would take us back to October of last year, and you can see the rest, down to 25% of October 2020. Nobody's calling for that, but just to give you perspective on home price appreciation, I think this is something that we need to bring to those that we're working with, maybe even those that have bought homes in the last couple of years that are wondering, okay, did I make a wise decision? In how well am I staying in touch with them and educating them on the market, not just those that are thinking about buying, but those that have bought. Critically important. I'll give you one last slide before I wrap here and ask Jess if there are any questions. Home price appreciation pre and post pandemic, depending on the city that you're in. This is a great perspective on home prices where we're at right now to show you, hey, here's what the run up looked like during the pandemic. Here's what it looked like prior to that, from 2017 up to 2020 to the start of the pandemic, just to give you a little bit of that perspective and give those that you serve that perspective as well. And like I mentioned, Kate's going to be on the deep dive next week, bringing all of the 2023 forecasts for prices, for homes sold, for all the things that you want to know. So don't miss that. That's going to be an important deep dive that you're going to want to take a look at. Before I turn it over to Jess, one thing that's coming out today are the KCM winter buyer and seller guides. You know, if you're a KCM member, you can download those today. And the bottom line is, with prices, with everything that we're talking about, this is a very fast moving market. Keeping your clients educated on this is our job. The guides are a great way to do that. You can put that in somebody's hands. They can educate themselves and you can have a conversation on it. If you're not a KCM member, you can go to trykcm.com/guide, start a free trial, and grab those as we go through the next few months, because I think they're going to be critically important. So, Jess, I want to pause for a second and see if we have questions out there right now.
Hi, Dave. I did see just one question come through from Jill, who asked, are the depreciation rates based on asking prices or final closed sales price?
That's a great question. So this, I think this is the slide that she's asking about. This is from Kay Schiller. Those are for final closed sales. So great question there. And you know, when somebody says prices are gone down, and Jill, that's a great question. You want to say, is that asking price? Is that list price? Is that sold price? Is that median price? So many different ways to take a look at that.
Awesome. That's the only question I see coming through today, other than people being excited about the guides.
Wonderful. Good. Well, if you haven't had a chance to go in, those guides will be available this afternoon. So put that on your calendar to maybe download this afternoon. If you want those guides, you're not a member, go start a free trial. You can get those guides and use those for the clients that you serve. So we'll wrap on that. We'll see you back next Monday for the deep dive. Again, talking about everything coming for next year. You don't want to miss that. And we'll see you next week. Take care.